think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. I appreciate you all for staying tuned with the channel, and the channel has been growing, and I'm just really grateful for you guys. And so today I want to do something special. I kind of want to show you all my portfolio. So this is one of my portfolios. This is my Roth IRA with TD Ameritrade. And so I want to show you all what I'm actually investing in and my thoughts behind why I'm investing in them. So we've seen that the market has had a lot of volatility. A lot of risk assets have been selling off tremendously. We've seen some of these stocks just plummet, 50, 60, 70%. We know that the Fed is even coming out and saying that they're going to start tightening next month. So I'm also being very cautious of that, being cautious of if they come out and start tightening, are my stocks going to sell off? Because I actually got my stocks at a good value. I bought them early last year. Most of them I bought early last year when they were low. And now they're starting to run up because we are seeing this commodity super cycle kind of play out. We are seeing that the Fed cannot print resources such as oil, platinum, palladium, things like that. And so we're going to look at my portfolio just so you can see what I'm investing in and why I am investing in them. So let's dive into it. So you're looking at my TD Ameritrade. This is my Roth IRA. As you can see, I'm not a big baller, but I got a little something in there. At one point, the account was at 28,000. I started kind of going risk off because with a Roth IRA, you can put up to $6,000 in per year. But I started taking some of that money out, some of that liquidity out when I knew that the market was going to go through some turmoil. So I did take some of that money out, and some of this is actually losses because I have lost probably about $1,500, something like that, since the market has been taking a turn. So yeah, I mean, pretty much that's just the nature of the market. I know people that have lost a lot more than me because they were into more riskier stocks and growth stocks. So let's dive into it. So AG&C, this is a REIT, which is a real estate investment trust. This stock actually pays a solid dividend. It pays anywhere from 10% or whatnot. And so I believe that REITs are pretty much a good investment because they are in charge of rental income. And right now we're seeing that with inflation that rents are rising and people are having to pay more for rents. So that means that a lot of real estate investment companies are being able to make more money on their investments. Now, when you look at other sectors of real estate, such as investors that actually buy rehab and flip homes, that's a whole nother kind of category. But the people that are kind of just been renting places out or whatnot for a long time on apartment complexes and stuff like that, they're actually pretty profitable right now. So they pay some solid dividends. And you can look at just even some of their charts. So we're gonna go look at just kind of historically where they've been at. So right now the closing price was $11.76. If you look at the a 10-year chart, you can see that the high, around 2013 was actually more around $35. Right now, I'm buying them at $11, a little over $11. So those are some things to think about whenever you're investing in these types of companies. And they do pay a solid dividend or whatnot. And so that is why I am in there. All right, so Amlp, this is actually a commodities ETF, which is, I believe, based out of South America, but I could be wrong on that. I mean, I've seen so many different stocks that sometimes I just be getting lost in some of them. So this one seeks investments that correspond before fees and expenses, generally to price yield performance of its underlying index, blah, blah, blah. It says that It focuses on cash flow from the transportation, storage, and processing of energy commodities. So we see that the price of oil is actually going up. We see that the price of commodities are going up. So this is a stock that I am in. And it has done pretty well. I've started buying it around $34, $33. I think it got down to like 30, close to $30, and I bought more shares. And they pay a nice dividend. So the annual dividend right now is 9.37%. So this is, for every share, I'm getting paid about $3.56 per share. So this is a company that I really like. Best Buy. I just started buying into Best Buy. They're actually a solid company. I mean, they took a big hit with the risk assets and everything. So I just started kind of just nibbling into them. Like, as you can see, I only have about 2 shares of Best Buy versus 29 shares of Amlp. The Best Buy kind of gives me like a little more of a diversifier in a way. So I'm just kind of nibbling on there, and I may buy more if it goes down lower or whatnot. But Best Buy pays a 4.86 dividend, $3.52 per year. So that's pretty much why I'm in Best Buy. So now other stocks. BTI. BTI is British Tobacco Industries. This is a tobacco company. They actually started getting into marijuana as well. I believe they announced it. So the stock was trading about $39. I got in at about 34. Now it's at 43. So it's been bouncing up and down, but this stock actually pays a solid dividend. So when I'm looking at this stock, it pays a 6.65 dividend, so $2.87 per year. So I've been buying them for a while, and they're actually historically off of their lows, off of their highs. I mean, so actually, if I show you the chart, just looking at where they were a while ago, I mean, you look at their 10-year chart. Let's see where they were at. They were at over $70. So I started buying them last year around this range. So I've been buying them for a while, over a little over $30. But on a 10-year chart, they were at $70 before, and now they're hovering around 43. So I'm getting paid some nice dividends with them, and I just like the company. So yeah. C-Web, this is not something that I'm really into, but this is a China internet bull stock. China did recently cut rates, and so I'm kind of just looking at, okay, what are some other ways that I can buy some cheap shares and just wait for them to run up. If you look at this one, this is a Chinese internet ETF. If you look at the chart on this, it's just insane. So if I go to the chart, let's see, what? Okay, that's tripping. But actually, I can go here to the chart. So if we look at, let's go to C-Web. C-Web, it's just easier than using the charts at TD Ameritrade. So if you go to the chart and you look at where they were, especially at the beginning of what it was 2020, something like that. This company was at 2021 actually. So their high was $110. This is when everything ran up in February last year, and then we saw the 10-year yield start to rise, and it got killed. And then China went through a lot of regulations and shutdowns and such, and so it just got killed. So it went from $110 to $5. China started cutting rates again. They're usually ahead of the U.S. in that sense. Right now, we're tightening. They already went through their tightening process, and now they're starting to cut rates. So we'll see what it does. I'm just accumulating. I'm going to start accumulating a little more shares. So I'm just trying to see what happens to the market or whatnot. So that's pretty much why I invest in that company. EMB, this is actually a natural gas company. So natural gas has been doing really well, and this company pays a 5.92% dividend, so $2.64 per share. I try not to do a whole lot of trading in my Roth, because sometimes I just need a break and stuff. So it just gives me comfort to know that something's paying me a solid dividend, especially with inflation at 8.5%, according to the government. So Enterprise Products company, this company I've been buying since they were about $21, something like that. And they pay a 6.95% dividend. So again, this is another company that pays a solid dividend, and they actually transport energy, and I believe they help build pipelines as well, energy pipelines. So EWZ, this is iShares Brazil. We know that when tech stocks, growth stocks take a lot of hits, a lot of big hits, people do run towards emerging markets. Brazil is an emerging market that a lot of people have their eye on and they have far less geopolitical risks than countries like China and Russia. So this particular ETF, is comprised of some of the Brazil's biggest companies or whatnot. But it's at an 8.24% dividend. So that's why I'm in there. GBTC, this does not pay a dividend, I don't think, but this is just the Grayscale Bitcoin Trust. I am bullish on Bitcoin long term, and this is actually fairly low compared to where it was. I mean, if you look on the 1 year chart, they were about $55, something like that, and now they're currently at $18. And so, I mean, you could buy, other companies like Mara or Riot, Blockchain, MicroStrategy, and stuff like that. But they actually hold their Bitcoin, and they have a lot less risk. MicroStrategy has a lot of leverage, and they take out loans to buy Bitcoin and stuff. And so I'm just kind of playing it a little more conservative with Grayscale. Gold, Barrick Gold pays a dividend, not that much, but gold miners are very profitable. And so I'm just getting ready for the gold bull market. I believe that gold's going higher, and currently I have about 24 shares of them. ICE, this is a ETF. It's actually a company that owns the NASDAQ, I believe. So this was close to about $140 earlier within the year, I think earlier this year, and now it's at 97. And they're pretty solid. They have a lot of diversification as well. IEMG, this is emerging markets. They actually pay a solid dividend. ILF, this is iShares Latin America again. So they pay a solid dividend. I believe their dividend is, 7.32%. As you can see, I invest in a lot of companies that pay some solid dividends. JD, this is company is almost like the Amazon of China. I mean, I guess they have a lot of competition with Alibaba, so I'm into them. I believe that they're going to go higher in the long term. Lukoil, obviously, this is a Russian stock. I am not able to trade this company. My average per share is about $13 on the stock, and now it's at 6.96. They actually paid a solid dividend before the sanctions were implemented. So, if you've seen the video with Rick Rule, we talked about the Russian stocks, and I'll actually post a little clip about that. So MCHI, this is iShares China. This is just a way to diversify because a lot of Chinese stocks have been very volatile over the last year. So, I mean, I've watched Alibaba go from being a good value stock at $200 down to $120, down to $85. Yeah, iShares China, I mean, you can obviously sell some shares at a loss to get that tax benefit, for a capital loss. Yeah, and then you can average into MCHI if you took losses. MO, this is a tobacco company as well, Altria. This is actually one of the top performing stocks over the last 30 years or something like that, and they pay a 7.05% dividend. So that is why I am in there as well. And we know that inflation affects commodities. Tobacco is a commodity. MOS, Mosaic. This is a very volatile stock. This is a a agricultural stock, especially in fertilizer. I've made money off of this stock. I've lost money off of this stock, but I've made more than I lost. And this stock pretty much ran from under $20, back here to close to 70. I think it's went over $75 actually, but I mean, it's saying 70 here. And now it's currently trading at 57. I believe with the food shortages and such, that stock will go higher. Nilsi, this is this is a nickel depository for Russia. I cannot trade them. NLY and NRZ, these are REITs, and they actually pay solid dividends. I'm kind of just averaging in the REITs. I'm not really putting a whole lot of capital there. I mean, I probably only have like a couple $100 in each stock. So I'm kind of just playing it safe, seeing what the housing market do, see if it affects the REITs, if they cut dividends or whatnot. So I'm just kind of just playing it safe and not going all in just because they pay a high dividend. So as you can see, NLY pays a 13.92% dividend. So that's a lot. NRZ pays a nice one too. This is Gazprom, natural gas for Russia. I can't trade them right now. RSX, this is the Van Eck Russian ETF. I bought the heck out of them before they halted trading with it. This was the last one they halted trading with. So, and they went from, actually, if you look at them in their chart, they went from it was over $30. Now it's at 5.65, and it pays a 26%, 26.96 dividend. I don't know how the heck I'm going to get my dividends. I'm just, Rick talked about that on my last interview with him. And so, yeah, so we'll see. Sandstorm Gold, this is a nice gold company. They actually do gold streaming. So streaming is pretty much they finance the mines because the mines do need money to operate. And so they finance the mines and then they get a share of the gold that is mined. So Sandstorm is a solid one. SBSW, this is Stillwater. This one has a lot of geopolitical risks. I believe they're in South Africa or something. And they actually mine platinum and palladium. I mean, the stock went up to close to $21 and went back down towards 11. So I actually sold some shares of them just because I did submit my portfolio to Rick Rule, and this company he said was solid, but it has a lot of geopolitical risks. So you want to kind of be careful with how much you throw into something that has a lot of geopolitical risks. As you can see, I have how much money tied up into Russian stocks. I got $622 here. Then you go down Nilsi, I got $300 here. So that's $922 about. Got $130 in Gazprom. So that's 900 and no, that's 1,000 something, 1,052. And then I got RSX, which is 1,400 and something. So I got about $1,400 in Russian stocks that is just frozen, and that was because they were so cheap. However, we'll see, if that's just going to be a lesson learned or whatnot. I don't think $1,400 is going to be life changing for me. However, it's still money that you don't want to lose, especially when liquidity is drying up right now, right? All right, so Starbucks, I just recently started buying into them. Starbucks was close to about $120 last year, and now it's trading at about $73. I go to Starbucks sometimes, and I know Starbucks has a cult following pretty much, so, and they actually pay a 2.67% dividend. So I think they're a solid company to hold. And if they go lower, I will probably end up buying more shares. Okay. So SHI, this is a 1 to 3 year Treasury Bond. These are I just buy these just to have some extra liquidity. Whenever the market does take a turn or a deep dive, I'm able to sell some of these and be able to buy shares of other companies. I mean, right now I only have one share. I've had as much as 10 to 15 shares or what at one point, but I have been selling them. SLB, this is actually a tech stock, but it's a tech stock for oil technology and energy technology. So it's actually interesting because it gets benefits from being tech, but also being a related to the commodities. So if you look at this one actually pays a dividend as well. It's not that much. I mean, it's 1.7%. So, but I think that it's one of the growth stocks I can invest in and actually, get the benefit of the oil. So this is the Sprott Platinum and Palladium Trust. We know that platinum and palladium is probably going to go higher because of the green energy initiatives. So I am buying into the Sprott Trust. I don't have very many shares right now. I mean, it's about 135. Platinum and palladium are very volatile, more volatile than gold. So I just kind of be careful and just make sure that, I'm buying at the right time. For example, I mean, you could have bought this for $13 around December. It went all the way up close to $20. Then now it's back down to $13. And then even last June, it was a little over $20. So you can see that there. So something to think about. STIP, this is another bond ETF that's just for extra liquidity. Only own 5 shares of that. I've owned a lot of them, close to 20 before. Suncor Energy, this is a oil stock out of Canada. I actually started buying them when they were about $24, and they've been skyrocketing. I mean, now they're at 38. I mean, when I say skyrocketing in terms of energy, it's not like some of these growth stocks, but I've been buying them for a while. I only own about 17 shares, and they pay a decent dividend. I hope that they increase it at some point. 3.85%. I mean, this is on the lower end of energy companies. I was invested in Total Energies, which is out of France, but whenever you get paid dividends, they charge you a fee for it being a foreign entity or a foreign stock. So they charge you about $5 of your dividends and stuff. And so I ended up selling them. And plus, they were whole tied with the whole Russia thing. And it was pretty much Shell Energy. That's what they, no, not Shell. So TTE was tied with Russia. That's Total Energies. And then I was also in Shell as well. And so, yeah. But AT&T, they've been beaten up for a while. I mean, they were at $23 about a year ago. Now they're at 17. I remember when Warren Buffett sold them and everything, and they took a dip. I don't have very many shares. I'm kind of just waiting to see what happens in this market, but I'm just kind of nibbling on some companies that I like, and if they go lower, I'll probably end up throwing more cash in. But they pay a 5.44% dividend, so that is AT&T. Another one, Target. Target took a big beating. It was at $260 at some point, and now it's at $155. Target could go lower. I don't know if they have to increase their prices because they are getting hit by inflation. They cost them more to buy products in bulk or whatever, however they do it, and then sell it to the consumer. So Target has to increase their prices and pass those costs on to the consumer, but they pay a 2.32% dividend. I'm kind of contemplating selling them once I get a bounce in them. I think longer term they could be a good company, but really I could sell 2 of these shares. I mean, that's what, $300, and I could go buy like EPD, for example, $26. I could buy close to 12 shares of EPD and get a 8% dividend on them. So I may end up selling them at some point if I see a bigger bounce. Twilio, this company was actually close to $400 at one point. It went down to about 94. I got out of them. I got a bounce in them, got out. I like them long term. I like them as a tech company. I mean, I just noticed one day I pulled up my Google Authenticator app, and I noticed that Twilio owns them. So they actually provide a lot of different technology resources to different businesses and stuff. And, I like them longer term, but to be honest, I may just sit on them until, the Fed reverses course or something. I may, sell this after a little bounce, take a little profit, or whatever. I mean, I only have one share of them anyway, so I mean, it's not like I'm going to get a huge amount of profit, maybe 15, 20 bucks. So uranium, Sprott Uranium Miners, URNM, the uranium ETF. I actually sold some of my individual uranium stocks. They've been getting beaten up. I've seen URNM actually go down to about 50 something bucks. I mean, they were over $100 at one point. And, I really just felt like I wanted to be a little less risky. And so the ETF, they're more diversified and they pay a solid dividend. I mean, their dividend is 7.53%. While we're going through these rocky soils, these rocky times, in the market, I just want to be in something that's going to pay me to hold it. So they pay a bigger dividend than a lot of other companies like Cameco and such. Vale. This company actually mines a lot of the metals that we need for clean energy. They also do a lot of iron ore, and they are actually based out of Brazil. So Vale took a big hit. They were down close to $11, went up to over $20, and now they're back at close to $17. They pay a solid dividend as well. So Vale pays a 15.96 dividend. So, I mean, that's pretty solid. That is pretty solid for this company. So I am in a Vale. Wheat, this is a wheat fund. We know that wheat has played a factor in Russia. The Russia-Ukraine situation. I mean, we saw this go from $7 up to $12, and it may go even higher as farmers are now seeing that they need these fertilizers, and that wheat is actually being impacted. I mean, a third of the world's wheat comes out of that area. So, and this comes with a lag. I mean, we're eating probably farmed food from like last year. I mean, they grow it and they, package it and all that stuff. And then they send it off. Well, they send it off to factories and then they package it and process it and blah, blah, blah. And then it's on the shelves. And so we're going to see a lag with the food prices and everything, and especially with the wheat crisis. I think by next year, we'll begin to see that even more. So I'm just kind of accumulating shares right now, and we'll probably end up accumulating a lot more at some point, this along with MOS. Another one is Walmart. Walmart took a huge dip. I mean, from 160 down to, 116 or something like that, 118. So I only have 2 shares of them. I'm just expecting a little bounce in Walmart, and then I'm going to sell them. So I'm just going to do a trade on them. So some of these companies, I'm actually just doing a trade. Some of them I'm planning on holding. I'll probably end up doing some stop losses and such, because right now anything can go down. I mean, energy is obviously, up because gas prices are continues to stay up. There's still shortages. There's still supply chain issues. But, if there's a lot of fear in the market, I mean, these stocks could just tank. These stocks could take a big haircut. So I'm trying to just, be more conservative and stuff. I may end up buying some more bonds and just sitting, just waiting for, to see what happens, especially next month when the Fed starts to tighten and everything. But I just wanted to give you all my portfolio, my current portfolio, my Roth IRA. And I hope this is helpful so that you all can see, why I invest in some of these companies and some of the things that I'm talking about with them. So if you like this video, be sure to subscribe, be sure to hit the like button, and I hope that you all stay blessed. You have a blessed day. Peace.